Greetings, this is Huskins, your Forex mentor. I'd like to follow up on the trade plan I posted earlier on trading the employment report from the United Kingdom. We had that news at 4:30 and looking at the data from this calendar website as well as the labor market statistics official website. Basically, the news was the employment rate for those aged from 16 to 64 for September to November 2012 was 71.4%, up 0.1% for a quarter prior. There were 29.68 million people employed aged 16 and over, and up 90,000 from June to August 2012. So basically, there are more people who are working. The unemployment rate from September to November was 7.7. Now, this is from the economically active population, which is down 0.1 from June to August 2012. So this is another, both the more jobs are being added as well as the unemployment rate is getting lower. So both of these talk about a more robust UK economy, at least when we look at the jobs front of it. And uh, if we just want the summary, we look at this calendar from Forex Peace Army. It's very easy for us to look at, what the market was expecting and what turned up. So the market was expecting a 7.8% unemployment rate, and it turned up to be 7.7%. The market was expecting a flat claimant count change. Now, what is the claimant count change? The claimant count change is the number of people claiming unemployment related benefits during the previous session. So, the more people who claim unemployment benefits, the worse it is for the economy. So, all in all, the employment number was appeared to be very good. So the knee-jerk reaction when the unemployment number is good is to bid up the currency. So let's see what happened. This was the news. It came out at 4:30, which caused the GBP USD. The chart which you're seeing right now is that of a GBP USD, and you can see the news pushed the GBP to be stronger than the USD, and that is why this blue candle you can see. All right. Our approach of trading it was different because we looked at history, and my assessment was that this employment number does not hold or does not continue to increase the strength of the GBP. And my approach was to reverse the knee-jerk movement, and the way we were going to do that was using a 21 SMA. So we've plotted this 21 SMA, and the idea was to reverse the pre-news trend, and with the expectation that the market would initially move in one direction and then change its course and move in a separate direction. The idea was either to have a 20 pip stop or a 30 pip stop and a 20 or a 30 pip target. So now let's see what this trade resulted in. So you go, there's no trade so far, and there's no trade so far, and there you go. At about 5:30, that is 1 hour after our news, we see a crossover of this 21 SMA. Now this would be a sell signal to go short on the pound dollar, and that's indeed what we would have done, gone short at 5,867. and with a 20 pip stop would be 5887, a 30 pip stop would be 5897. Now let's see how this trade would have materialized. So immediately after we place our order, there we go. Without any pain, we hit our 20 pip target. And now there are some folks who like to actively manage their trade. So they would maybe, change their stop loss into that of a break even so that it be a risk free trade now. And there are some folks who set and forget it. So let us see that our first trade is out, our 20 pip gain trade is out, and that would result in a nice 20 pip target. Now, depending on whether you are active or you are passive about this, um, or you don't do anything, let's see what happens. The market fails to achieve this target number two, and for the active folks, they would be stopped out at break even. That means that at about 8:15, they would be out of the market. For the passive folks who use a set or forget um, trade, they would yet be in the trade with a risk of 30 pips, and the market goes against them a little bit, but it does not stop them out completely. And there you go, hits a target. So there are few possibilities out here. A profit of 20 pip, quick and easy without any pain. Stop loss at break even for if you had actually moved your stop loss to break even, or a profit of 30 pips, or a combination of either of these three. Thank you for listening to this video. Hope you enjoy this presentation. And if you want to learn more, you could always buy the Trade the Economic Indicators program. The link is available below. Thank you.